Hello, good morning, everyone. So we are, the Nifty is bouncing back today, so things are looking interesting, and there are many, key observations that I have today. I mean, I was looking at RRG and many other things, and that's where I found many interesting stuff. Which sort of supports that Nifty should rise higher from here. But we need to be cognizant of levels, and what are the levels to watch out for. Okay, because if at all the Nifty index has to break down further, I mean, which is something that I don't think so. But if at all that has to happen, then there are certain levels that we need to watch on the upside. So what are those levels? And what are the other things that we need to watch out for? These will be the discussion point today. So let me quickly share my screen, and please someone of you confirm if you're able to see my screen or no. Okay, I is my screen visible? You can just comment yes, so that I can move forward then. Okay, thanks for the confirmation. So Nifty index, let us delve into that because it is at an interesting point right now. We had spoken about Nifty index and the importance of the 40-day exponential average. It broke in Friday's trading session. Okay, but yet I was a little hopeful of a reversal. That is because the Nifty index managed to save 61.8% retracement, at least in Friday's trading session. So today in the morning it looked like that it might break on the downside, but again, the Nifty index has bounced back very strongly from there. Uh, so so this is encouraging sign. And one more thing that is even more encouraging is that the RMI has given a bullish crossover. Now, in the near term, especially these moving averages, which on the hourly chart is at 25,090, that is the 20-hour moving average, and the 40-hour exponential average, that is 25,129. These are the important resistance levels in the near term. Okay, if these resistance level are broken on the upside, okay, then what, the levels that I will be looking out for, one would be this swing high which we had formed, I think in so this we had formed on 16th of July. Okay, that is last week around Wednesday. So that is one level which is at 25,255. Okay, so let me write the levels. So in the near term, as I mentioned, the moving average, which is 2509 and 25129. Okay, resistance if closed decisively, then the previous high is 25255. Okay, next resistance and final resistance, 61.8% of entire decline. That is that I'll need to check. 1 minute. Okay, let me put it down over here. Okay, so to be very precise, it is 25,369. One. 25,369. Okay, so these will be the levels then to watch out for if the hourly averages are broken on the upside. Now, please remember that hourly averages are dynamic, so every hour it might change, so that level may also change. But when the RMI is bullish, has given a bullish crossover, and it tends to cross and it breaks above the hourly averages, then it is a sign of strength, at least in the near term. Okay. Then, of course, what we would want is that on the daily and the weekly as well, especially on the daily chart, it should then break above the daily averages as well. Okay. Wait, I think I'll need to refresh the screen. Let me just remove all the temp files in case that is creating a problem. Wait. Okay. So yes, so these will be the levels. I mean, that is 25255 and the 61.8% retracement which I mentioned, that was 25,369. Okay, these will be the upside level to watch out for. Now, we had spoken about the Bank Nifty index, right? I think in so wait, let me just make a duplicate tab. So, we had spoken about the Bank Nifty index in Friday's trading session and why it was at a very, very important support level. So, let us discuss that because, that seems to have worked out for now. So, the 40-day exponential average and the lower band, both were at the same level and bands were also contracting a bit. So typically these work as very good support levels, and in fact, what you may notice is a reverse divergence, which means that the index is making higher low. Okay, RSI is making lower low. So this is a classic sign of hidden divergence, and hidden divergence usually a trend continuation. Okay, so over here also in Bank Nifty, let us look at the levels. Uh, so if this entire correction is done, then I would take 61.8% retracement of the entire decline, which comes to around 57,095. Okay. So let us consider this, that if at all, in the medium term, this if this correction has completed, then ideally it, sort of needs to break this resistance zone. Okay, because breaking this resistance zone means, higher top higher bottom formation is now, at least the lower top lower bottom formation that was happening, that has gone. And in fact, even the 61.8% retracement level will also be taken out. So on the upside, that zone would be 57,363 to 57,271. Okay, so this is now the major resistance zone for the Bank Nifty. And see, one more interesting thing in Bank Nifty that is happening is that a bullish crossover has happened, and now we are at the averages. Okay, so once the averages breaks on the upside, so the 40-hour exponential average is higher than 20, so that level is 56,768. Okay, so if that is broken decisively on the upside, then we should be headed higher toward these levels. And once this breaks on the upside, I think the up move should start. And I think that this might break out on the upside. That is because I can see something very interesting on RRG. So in RRG, one thing to note is that the Bank Nifty had gone to the leading, few days back only, which means that it had started outperforming the Nifty index. And what is even more interesting is the weekly setup. Okay, because in the weekly setup, it has started to turn around, and we have already discussed this in length. What does it mean when some stock or the index turn around from the weakening? It basically means that whatever the short term correction it was in, due to which it led to the Bank Nifty falling from leading to weakening, that seems to be getting over, and now a turnaround can happen where it can again get back to leading. Okay. uh, One more thing, that is very important and that is happening is that the FMCG is turning around. FMCG, consumer durables. One thing that I would really like to see is Nifty IT, making a comeback, because on the daily chart, on the daily RRG, it is literally in dumps right now. Okay, so here some turnaround has to happen. So when the larger part of your Nifty, which is Bank Nifty, is showing signs of turnaround, IT, which is already in dumps right now, okay, if it shows turnaround, and Reliance also has seen a good enough correction from the top. So when these three things, at least stabilizes, so this will, sort of restrict the downside. That is visit. I mean, so far that we have been seeing Nifty correcting, right? So at least that fall might abate, and if at all other stocks or sectors starts participating, then it should lead to some help to the Nifty index. Now I'll show you one more index which shows a very promising setup. Is actually Nifty Metal. Now why this is interesting is because it held the averages. It has been holding the 40-hour exponential average, and it is now trying to turn around, and there is a bullish crossover that is likely, that can happen. Now why this is an important development is because when you see the monthly chart of that, okay, please understand one thing. What has happened is that a very big resistance zone was broken in 2023. Okay, this was like almost a 14-year high that was broken on the upside. So typically when that happens, I mean, that move cannot end in 6 months, 8 months, right? So this should go on for some time, I feel, at least for the next few years. But what we might see in between is a bout of correction. So this sort of correction has happened now, and it is now trying to come back. Also on the weekly chart, it is trading above all the important moving averages as well. It has broken above the previous high, thereby negating lower top, lower bottom formation as well. And on the daily chart, it is taking support of the averages and now trying to make a comeback. So the setup over here also looks interesting. So this should be the sector to watch out for, I feel. So in the past few days we have spoken about FMCG. I think then we spoke. I think there was one more sector that we had spoken about. I can't recall. Mm, So FMCG is one, but now metal is one. In fact, even Bank Nifty is trying to show signs of a turnaround. So even that should be interesting. So let's see how things go on. But mainly for the Nifty index, as I mentioned, especially when we look at the hourly chart. Okay, breaking above the averages is important, and after the averages are broken, the max upside level is basically 25,369. That is nothing but 61.8% retracement of the entire decline. Okay, so these will be the level to watch out for. And why I feel that this should eventually be broken on the upside is because please understand one thing: swing is a very very short term indicator, and it moves very fast. Okay, so you can see that in this decline, only 4 5 6 days decline only, it went to the oversold zone. Okay, from overbought to oversold zone. So please understand that swing is extremely fast. uh, but there are many other indicators which are short, which works well from short to medium term perspective. So say, while I was checking the sentiment data, the other indicator which is now coming to the oversold zone is the OIPCR. Okay, and over here also you can see the trend. When the markets are rising higher, okay, this indicator will rise higher. When it is going down, it will fall. Okay, then again when there is a little bit of up move as well, it will start rising higher, and so on. So basically this indicator has been falling, and now it is sort of coming to an oversold zone. Okay, it is not there yet, but please understand this is 9 MA. Okay, so even when the market turns around, because we have smoothened it, it might take some time to turn around. But given that it is at the lower end of the range and Nifty is at an important support and it is trying to bounce back from there, I think such oversold conditions help us to sort of make a conclusion that even if the downside has to come, it might be limited, or we might just chop around for some time till the indicators are out from this oversold zone. Okay. The other thing that is happening is that the FII is positioning. I mean, they have been left, right, center. They have been selling. Uh, I don't know, frankly, how long will this last. But earlier, what was happening was that, just to give you a sense, FII net, uh, FII index future long percentage. Okay. Yeah. So FII index long percentage, earlier that was around the 20 mark. So that's where in percentage terms there was some scope of correction, because in percentage terms, typically when it gets to say somewhere around 17% or so, it gets oversold. Of course, in bad times it can even go down to as low as 8% as well. But now even this is coming to an oversold. In absolute terms, it is already in oversold. uh, and see, this is the medium term template that I have kept. Okay, like within sentiment indicators for the medium term perspective, the things that I look out for is FI positioning, client plus FI, and 20 and 20-day AD ratio. Okay, out of four, three indicators are at an extreme. So just to give you a sense, when the clients are extremely long. Okay, usually clients and FIs are opposite. Okay, so all this while, what was happening is that the FI's positioning was reaching an extreme, but client's positioning was not reaching an extreme. Okay, so you can see that every time whenever the client positioning, client ka long comes to around, say, somewhere around 94,000, it is an indication that the clients are bullish. And usually they are right at the bottom. Okay, that is what history tells us. That is not something I am telling you on my own, but this is what the data is telling us. So out of the four indicators, see what happens is that when four out of four indicators gives you the that oversold reading, you're a lot more confident that a major bottom should occur. Okay, but right now, apart from the AD, the other three are indicating extreme positioning, and AD is also not in an oversold zone because small mid caps have relatively been okay. That has lifted this AD, because this AD consists of entire basket of stock, on the exchange. So that's where AD is saved, but the other three are in extreme positioning. So at some point of time, I don't know when, but this move has to unfold on the upside. Now, whether it's spends some time over here, then correct a bit, and only then go up. I mean, these are something that we'll evaluate on a day-on-day basis. But when when three of the four medium term indicator points out that we are reaching some sort of that we are reaching at some sort of an extreme, and especially at that time when the world markets are also doing well, usually these are signs that they should eventually unfold. I mean, things should eventually unfold on the upside. Okay, so these are basically the things that I'm watching out for. And I think the main takeaway is that bank nifty is finally trying to turn around. Some other index like FMCG also looks good. Just for the people who don't know, that we had discussed FMCG index few days back. uh, so over there, a cup and handle is forming. Okay, sorry, I'm searching it in indicator. So over there, basically, a bigger cup and handle is forming. In fact, this shows a breakout is already done. So this is not a very nice cup and handle pattern, but nevertheless, I mean, the structure shows that this is sort of a cup and handle pattern that is forming. So even so, that is the reason why this looks interesting. And the other thing why it looks more interesting is because its monthly setup is very good, which means on the monthly chart, it has taken support at the 40-month average, and now it is trying to turn around. So whenever a 40-month is tested, okay, it usually calls for a good medium to long term bottom. That is what appears to be happening in FMCG. A little more confirmation we'll get it once the previous high is also break. So on the monthly chart, it starts forming higher top, higher bottom formation. So that's how we are poised. Nifty Bank, Nifty Metal, Nifty FMCG. These three indices look interesting, and apart from that, there are many other indices. In fact, media is the one uh, which is in the leading quadrant. Okay, and over there also we are seeing a bullish crossover on the monthly chart. On the weekly chart, it is already trading above the averages. Okay, and it is trying to consolidate over here. And on the daily chart, you will see that there is a nice consolidation that is happening, and the prices are sustaining above the averages as well. Okay, so if this consolidation breaks on the upside, this can be another dark horse which is there. But the only problem with media is that it is very skewed to Z's performance, right? So that is the only problem. I mean, that's why I did not discuss much in length. But the other two indices are actually looking good, and we need some support from Nifty IT index as well, which is right now in dumps here. Else, uh, this makes a very interesting setup in the Nifty index. So I think with that, mainly, I'm done with the observations that I have today. As I told you, the main takeaway is that Bank Nifty is turning around, which is like a larger component of Nifty index, and there are few other index which we discussed that looks interesting. So let's take up with the questions. On which time frame RMI positive is there? Time frame. Crossover. Okay, so it's on hourly. On hourly time frame, there is a positive crossover. Sunil Kumar says English में होता है. Okay, I don't know what to say. So we have been doing this in English, and we'll try to do it that way only. In IT, some stocks like Persistent, Goforge. Yes, you're right. In Nifty Metal, JSL is promising. Okay, let me check. I frankly haven't checked it. JSL. Okay. Yes, nice catch. It seems to be forming some sort of triangular pattern over here. And plus the Nifty Metal is also looking up. So yes, this actually makes a good setup to watch out for. So nice pick. Your analysis and how to navigate and how to infer from the chart. Thanks, DV. So the whole idea is to learn, and in fact, even I got some good idea from you today. So the whole idea is to learn from each other. So yes, we should do this more often. Which stocks in FMCG? AK, we had actually discussed, I think, in few sessions back. I don't remember. But you can simply go to RRG and you can type Nifty FMCG. So I had discussed the stocks. So yes, I think yes, VBL was one where actually the crossovers was happening. So wait, let me open one more screen. So IT, Nestle. Actually, in that session, I forgot Nestle was not something that I had discussed. I think it can be worth discussing because the setup is very good on the weekly, monthly chart. Now, there can always be that valuation argument and all those things in Nestle. But purely when I look at the setup, that looks very interesting because on the monthly chart, it has taken support at the 40. It is trying to turn around. As you can see, there is a bullish crossover here, and on the weekly chart, it is actually trading above the averages. And on the daily chart, we can see some sort of triangular formation form. Actually, this is not really a very perfect triangular pattern, but yes, I mean, more or less, it is basically this range which it is trading in. And if that breaks on the upside, I think that looks interesting. Apart from that, we had discussed few other stocks like BBL. Actually, I think after that it had performed also. BBL BBL's weekly chart was very interesting because there was this crossover that was happening after taking support around its previous low. So that is one stock to watch out for. But over here, please be mindful of this averages because these should act as a support. And I think while we were talking, it was maybe somewhere over here 470 or so, and that's where over there, even if it had to touch 4518, which is the 40R, that would have been a good upside, at least in the near term. But please be mindful of the risk reward. I think the other one which someone had also suggested was UBL. So UBL may the only thing that is happening is that it has gone sideways, but its RRG was looking a little interesting because it was turning around from here. Okay, so that is where we are. United Spirits also the I mean it has moved into the improving quadrant, but the setup over there is not that great when I had last seen. Okay, so it is trading even below the hourly averages. Forget about weekly. So it is kind of weak over here, but look out for some improvement over there. ITC is the one which is turning around, and ITC is also a heavyweight, in FMCG pack. So watch out for that. But if you want to form a more positional view, watch. I mean, go to the weekly chart and see. You might get a lot better insights. Uh, so yeah, actually, see when I see Nestle, it is now turning a bit on the left side, which is not a good sign. But we need to monitor uh, what is happening. So VBL and UBL even on the weekly chart is sort of showing some sign of strength. Actually, there was one more stock which is not over here, but I found it interesting while I was doing some scan. I don't remember, but it was Zydus Wellness. Okay, so when I do Zydus Wellness, you can see over here that it is already in leading. Okay, it has it has moved quite significantly in the near term, but maybe you can keep this on your radar, and maybe whenever it suits your style, uh, you can watch out for in Zydus. But I'll tell you what is happening in Zydus is that, see, any stock which has consolidated for a very very long time and has literally done nothing, those become a good stock to watch out for. Okay, and you can see that literally since 2018 nothing is happening in Zydus. Okay, over here also there is some major top which is there around 2400 or so. Now why this makes it why this stock is interesting is because it is starting to trade above the daily averages, and it is supporting this setup. Okay, where it pull back to the averages, then again bounces back. It pull backs, bounces back. And the other thing that I was watching Zydus. Now this is why this. I mean, what makes Strike a little bit more unique is that you have everything at one place, right? So when I was looking at Zydus, uh, what is happening is that its annual performance, okay, that has now started to pick up. You can see over here the revenue growth has started to happen. In fact, if you want to see everything in percentage terms, simply click on percentage growth, and you can see that in the last 2 to 3 years the growth has started picking up once again. Okay, and even the bottom line has seen a very sharp improvement in 2025. So this, along with FMCG, being in possibly coming into flavor, this can also be an interesting stock to watch out for. Uh, Another weekly, but when I scanned, some stock didn't come. Uh, KKB, let me just check it because I think this happens when few of the stocks are illiquid. That's where it comes. I mean, these sort of thing happen, but I'll need to check and I'll get back to you because honestly, this is something I had noticed. But when I saw these were happening mostly for those stocks which were a little bit illiquid. But anyway, see, to be very honest, we are working on this module. Uh, so let me show you. This is actually our Okay. So on the testing side, we are already testing it for the new module. So which will actually go live with 1 minute data. Okay. I mean 1 minute snapshot. Once that happens, I think all those issues will fade away. Just give us this week, and mostly you should be able to see a very smooth running of the software. Okay. Most of the optimization part should be complete this week. So we are hopeful to go live. By the I mean, the other features by Saturday, the coming Saturday, or max by the 31st of July. So please wait for a while. I mean, you are being very patient in that sense. Just wait for a while, okay? And these all minor bugs should go away. Uh, the other question is from Gurdeep Singh. Highest OI in options. Some time doesn't give much confidence when it breaks and the price comes inside the range. Do you have the data points where we can identify fake breakouts? So, Gurdeep Singh, I think I had mentioned this earlier as well. See, these will help you to screen the stocks. Okay, it doesn't mean that they are buy ideas. Okay, now say for example M&M, if it is coming into this list, there are a lot of things that you also need to watch out for. Whether if say 3200 strike is unwinding, but the highest OI addition is happening at 3250, then it doesn't make sense because it is again hitting a resistance, right? So over here, if the highest OI addition is happening in 3600, it is a good enough sign that it has room on the upside. Okay. Now say for example M&M I am looking at. Okay, if I then do some analysis over here. So please understand one thing, that these stocks work as a screener, right? It doesn't tell you that go and buy away right now. But say for example, if I see M&M, it seems to be consolidating over here. Hourly, I'll put the setup and see. I can see that it has taken support and it is now trying to break out from this consolidation, right? So this sideways consolidation, once it breaks out and it sustains, I think it should give a good move on the upside. Okay. So so that's where the OI data is also saying that 3600 people are building their position, right? So that's where this will make an interesting setup if we happen to close above say 30 to 40, 30 to 50 or so on M&M. Okay. But now say let me show you another example where, now see over here. Okay. Adani Enterprise 2625 above resistance, 26 unwinding is happening, but the addition is happening at 2620. Okay, then this doesn't make sense even if it is above resistance and unwinding is happening, because 2620 strike is seeing an addition, right? So most likely, even if it is a breakout, it might not work out well. So wait, let me now check the chart of Adani Enterprise. Okay. So see, what you can see over here is that there is some. So see, we have seen a bullish crossover. Now I'm doing a very very short term analysis, which means I do the retracement level. So over here, retracement level, when once it breaks about 26 28, okay, that's where it can get a little interesting. Okay, until then there can be I mean, even options data is telling you that there is a lot of addition that is happening on 26 20 level. Okay, so it might not be very easy to break that level. So that is how you sort of do those analysis. I mean, you have to keep in mind also where the highest OI addition is happening. I mean, if people are booking out this, then where are they moving to? That is also important to track. Okay, I hope you get this. So, Maheshi, I will still tell you the same thing. When the averages, so just think of Nifty only, right? It is having this setup. Sorry, NSE index. So it is having the similar setup, right? The prices are below the averages, but there has been a crossover. So that's where it becomes a judgment call. I mean, I might just want to make some position, but add more positions on confirmation. Okay, and this whole thing, frankly, depends upon the style as well. How to how what is your risk appetite and all. But yes, ideally, if the crossover has happened and it is above the 40, I mean, those are the signs that now at least the bear trend which Nifty index is in on the hourly chart, it is trying to move out of that. Okay, so then sustaining above the 40 hour will be an initial indication of a turnaround. But when I try to see the sentiment data along with RMI, my best guess would be to try to pick over here at least some, and then add along the way when the turnaround happens, and watch out for the sentiment data. That is how I would do. Now your question specifically comes to hinging, so let me just take this example. Okay. Now see, one encouraging thing that is happening over here is that this breakout seems to be happening and there has been this consolidation. So on the hourly chart, at least the things are starting to look up because it is forming higher top, higher bottom formation, right? But on the daily chart, now this area becomes an important resistance. One is the 40 and the previous high. So that should be the upside resistance zone to watch out for. Then if it starts sustaining above this, I mean, that's where you can say that there are early signs of a turnaround. Okay. But after that, you would want to see 61.8% breaking and all those things for your medium term confirmation. So that's how at least I think about it. Strike is data heavy portal. Yeah. So DV, yes. I mean, that is the hurdle that we are facing. But anyways, it should be very smooth now, with almost 90% of the system going on. I mean, going live with the new development. I mean, with the new optimization, hopefully there should be no issues. Now. Ranjan says LTI mine tree. LTI mine tree. So this is an IT. No, so over there it has, I mean, if you see the prices, it is going down. Not a very encouraging chart at this point of time. But only thing that you can take away is that there is some sort of wedge formation, you can say, or parallel channel. I don't know. Parallel channel that is there. So let's see what happens over here. So I think that's it. We are almost 11:40 now. I've taken all the questions. So let's see. I mean, Nifty as is that an interesting point? Just a final conclusion. Hourly averages will be the key. Once the hourly averages breaks, so the previous high of 25,255 and 61.8% retracement at 25,368, that will be the upside levels then to watch out for. So let's see what happens. We are at an interesting time, and as I mentioned once again, watch out for sectors like Nifty Bank, Nifty Metal, and from a positional perspective, Nifty FMCG, right? So thanks a lot for joining today's session. Let's catch up tomorrow and see what the Nifty does, whether we see a breakout or not. So thanks for joining, everyone.